Welcome in. We're doing a deep dive today, going to dig into Goldman Sachs' Q3 2024 earnings call. Got the transcripts right here. And let me tell you, it's not just about the numbers. We're going to see if Goldman Sachs is really making the right moves.
Right. Got to stay ahead of the game.
Exactly. So they had a solid quarter, revenue's up, earnings per share got a boost. But what's the real story here?
It's about resilience, more than just a good quarter. You see, Goldman Sachs is shifting away from consumer banking. They're focusing on what they're good at.
You mean like global banking and markets, that sort of thing?
Exactly, and asset and wealth management. It's all right there in the transcript. They're talking about premier clients and ultra high net worth individuals.
So less Main Street, more Wall Street.
That's the strategy. That's where they see the sustainable growth.
Makes sense. Now, there's this term I kept seeing, private credit. What's the deal with that?
Private credit, it's direct lending, basically. Instead of going to a bank, a company goes straight to a lender, someone like Goldman Sachs.
And this is a growing area.
Huge growth, especially with leveraged finance. And Goldman Sachs is right there.
So they're all in on this.
Oh, yeah. They've got, get this, $140 billion invested in private credit assets. They even highlighted a deal they did financing for a renewable energy company. It's all about structuring complex financial solutions.
So not just loans, but really bespoke stuff for big players?
Exactly. It plays right into that focus on premier clients we were talking about.
Gotcha. Now, besides private credit, they also mentioned M&A activity. Seems like it's up, but not as much as you might expect.
Yeah, there's this term they use, dry powder, basically cash that's ready to be used. But everyone's a bit hesitant right now. Interest rates, inflation, even the U.S. election coming up.
So everyone's waiting to see what happens.
Exactly. Uncertainty makes people nervous.
But someone's going to make a move eventually, right?
Well, Goldman Sachs seems to think so. They're anticipating a surge in what they call sponsor-driven M&A activity.
Bidding.
These are usually private equity firms, and they're sitting on a lot of that dry powder.
So they're the ones expected to jump in first.
That's the bet Goldman Sachs is making.
And that would be good for their investment banking business, of course.
Absolutely. They're the experts. They're ready to handle those big deals.
Makes sense. So it sounds like they're positioning themselves strategically, but there's also that regulatory landscape to consider. The call mentioned new capital requirements for banks, and Goldman Sachs didn't seem thrilled about it.
Yeah, they're concerned, to say the least. They're particularly worried about the lack of clarity around these new rules.
Interesting. So is it just resistance to change, or is there something more to it?
It's more than just that. I think they specifically mentioned Basel, the fee regulations. They say it's also complex.
And how does that complexity play into their concerns?
Well, they argue that it makes it really hard to understand the long-term effects. They're calling for more transparency, more dialogue with regulators.
So they want to be part of the conversation, not just handed a set of rules.
Absolutely. They're looking out for their own interests, but they're also talking about the broader financial system.
Makes sense. And of course, there's the U.S. election on the horizon, too. How does that factor into all of this, according to the call?
Well, they definitely see the election as a source of uncertainty, that's for sure. Especially when it comes to, future regulations, monetary policy, that sort of thing.
Right, because depending on who wins, we can see some pretty big shifts.
Exactly. It's all connected.
So they're navigating some choppy waters here, trying to anticipate the next storm.
It's a delicate balance, for sure.
It really gives you a sense of just how complex it is to manage a financial giant like Goldman Sachs.
It really does. And it's not just about them, is it?
That's right. Their moves, their concerns, they reflect bigger trends in the market.
Absolutely. It's a microcosm of the whole financial world.
So we've seen how they're approaching private credit, how they're dealing with M&A uncertainty. What other big trends stood out to you from the call?
Well, I think there's a common thread here, and that's specialization.
Specialization.
Yeah, and adaptability. Being able to change with the market.
So it's not enough to be good at everything. You need to be great at a few key things.
That's the idea. The call emphasized Goldman Sachs's core competencies, their ability to adjust to the market.
And that ties into their focus on those premier clients we talked about earlier.
Exactly. It's about knowing your strengths, finding the right clients who value those strengths.
Is a smart approach, especially in uncertain times.
Absolutely. It's about calculated risks, making strategic bets on the future of finance.
It's like they're playing chess and everyone else is playing checkers,
Right. Talk about a different level.
Totally. So we've covered a lot of ground on Goldman Sachs' Q3 earnings. What are the big takeaways, the things our listeners should remember?
I think the main thing is they're adapting. The whole financial landscape is changing, and they're changing with it.
And a big part of that is focusing on those specialized services.
Absolutely. It's not about being everything to everyone anymore. They're doubling down on what they do best, those complex solutions for big clients.
Right, and that connects to their move into things like private credit. That seemed like a key takeaway, too.
Definitely. Traditional investments, they're facing challenges,
Yeah.
low interest rates, volatility. Goldman Sachs sees that, and they're ready to capitalize on it.
So it's about being proactive, not reactive.
Exactly. Anticipating the future, not just responding to the present.
And of course, we can't forget those regulatory changes looming.
And the election. Let's not forget the election.
Right, both big question marks.
Absolutely. But Goldman Sachs seems prepared, whatever happens.
It's a lot to juggle. So we've talked private credit, regulatory headaches, even the upcoming election. Big picture. What's the one thing you hope our listeners take away from this deep dive?
I think it's how connected everything is. You might think private credit is just a niche thing, but it's part of something bigger.
Like a domino effect, one thing impacts another.
Exactly. And understanding those connections, that's how you make informed decisions.
Whether you're running Goldman Sachs or just managing your own money.
Absolutely. And that's what makes this so fascinating.
It really is. This deep dive into Goldman Sachs has given us a lot to think about. From the rise of alternative investments to navigating those regulatory waters, the future of finance is never dull, that's for sure. Thanks for joining us for this insightful deep dive, everyone, and until next time.